So meaning Wednesday night is confirmed.
He said should be. I think we think. Yeah, should be confirmed.
Should be
Wednesday.
confirmed. Okay, good lah.
Wednesday night and Friday night.
Yeah, I read your past year. The latest one I read, only given 2 hours.
Yeah. I also scared.
So it's very, it's very tough, 2 hours. Oh, your test, the marks. I actually put it at home, but all of you passed lah. And then, the day I compare, I think 2 test plus together, everybody passed. Got 80 plus, 60 plus, 60 plus lah. Yeah, like I told you lah, you all can achieve at least 60%.
This test was easier and got more time.
This one is easier, right? Yeah, I
got
see
more
the
time.
question also like easier. True. Yeah.
Also, I wish test one got more time also.
So you know how to do it.
Yeah.
Okay. Now, later if I have time, that I show you the answer, or I just share you the answer in the WhatsApp group. Then you all can check your answer now. Okay. Right. So we're going to start. Tutorial 12. That is. This is actually for like kind of like a public limited, right? Limited company. Yeah. Limited company. Limited company actually something different is actually the appropriation account, right? It's actually the appropriation account. Okay, so I'm going to start from question 1. I hope I hope I can do up to question 6. Yeah, because the 2, 3, 4, 5 is like 6 is actually a very short one, like theory, where I can actually share the answer with you. Okay, so we are going to do this one. All right. So question 1, this is question 1 is a standard type of question. Is the length is actually this long, but this one is actually very long, right? So now this type of question if come out in the exam, right? What you need to do is you go through every single item, and then as you go through the item, you have to jot down, like this one go to where? Okay, yeah. So if I use this one, right? Put green. Right. Okay. So let's say warehouse rent. Warehouse rent, you know there is expenses, right? So okay, let's say I put SLPL. Heat and light also SLPL like this. So as you read, you can do like this. Okay, SLPL. Okay, this one mortgage loan secure on office building. This is a non-current liability. Okay, so you put like this. This is how I label, so you can use your own. So office building, for example, this is non-current liability, right? So later on, when you do your question, you can tick, 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 tick. You know which one you already done, so you tick. Okay, revaluation reserve. Now revaluation reserve is equity, so I put E. Telephone is SOPL, right? Okay, postage is SOPL. Stationery is SOPL. Wages and salary is SOPL. So this one you identify where does this number goes to first now. Okay, this is also SOPL. Okay, this is also SOPL, right? Purchase return. Trade payable is current liability. Sales is SOPL, right? Okay, and then sales return is SOPL. Yeah. Trade receivable is current asset. Inventory, this is opening. Okay, opening. There are 2 stock, right? One is opening, one is closing. The other one is actually here. You can see, the other one is actually here, right? Okay, the other one is actually here. This is also an inventory. This is also inventory. But anyway, this is opening. Opening you put in SOPL, right? This is actually closing. Closing is in your SOFP, right? Okay. And then you have discount received. Discount received is SOPL, but this is actually income. So maybe you can put a sign here, income. Okay. Discount allowed is SOPL expenses. Bad debts written off is SOPL. Doubtful debts provision. This is actually your AFDD. Yeah, AFDD, but this is actually opening. Okay, opening. Yeah, all right. Motor expenses is SOPL. Okay, motor vehicle equity is non-current. Non-current asset. This is non-current liability. See, this is non-current asset. Okay. Depreciation on this one is Okay, this one is like your accumulated. Yeah, this is your accumulated. Furniture and fitting, non-current asset. Okay, so this is so this one is non-current asset. This is also non-current asset, so accumulated. This is non-current asset. This one is also non-current asset, the accumulated. Right? Okay, this question is actually a bit long. This one, bank overdraft, is actually a current liability, bank overdraft. Cash in hand is current asset. Interest paid is SOPL, expenses. Share capital, how many number of shares we have issued to the public? 1 million number of share and 1 ringgit each. So total is 1 million ringgit. So this is our equity. Interim dividend paid on 1st November. This one is actually paid during the year, like at the end of the 6th month, the first 6 months. Okay, interim. Okay, this interim we are going to do it in our appropriation account. So I put APP, which is actually your requirement of this question. That is like something like part B. This is your opening retained profit. Is a BD. Okay, opening retained profit. It's just like your inventory opening. Yeah. So this one you can put into you can put at the end. You can put into APP also. Yeah, SOPL also can, right? Okay, so we quickly go through. So that's how you actually label everything. Okay, then you come to here. Motor vehicle and equipment is straight line, as reducing. So reducing meaning you need to take a net book value. So meaning net book value, so reducing is you use net book value. Okay, you use net book value times 25%. So I hope you know what's net book value. Net book value equal to what? Cost minus accumulated depreciation, right? Okay, furniture is depreciated straight line. Straight line is the easiest one. So you say here 5 years. So meaning you take your furniture cost divided by 5, because here tell you it's 5 years, right? And there's no residual value. So you just take the cost of the furniture divided by 5, that's all. And this is your closing stock. Okay, doubtful debt provision is to be increased to 142. Now, you see this one? This is 93. Here say increase to 142. So tell me, is it an increase or decrease? Increase or decrease? Increase or decrease in AFDD? Do you understand what the question says? Doubtful debt provision is to be increased to 142. This is your opening. This is our opening. AFDD opening BD. Opening is 93. And this one is actually AFDD closing. So increase or decrease?
Increase.
Yes, increase. So you take the different, okay? The different then is an increase. If it's increase, it's income or expenses.
Expense.
Increase is income or expenses. Yes, anyone? Kevin? Hello.
Hello.
Yeah, increase is what? Income or expense?
Expense.
Yes. So this one, the difference is the expenses, yeah, where you put into SOPL. And in SOFP, you're going to put 142, okay, 142. So 93, this number is actually for you to make comparison. Okay, now just in case, just to do some revision. So it's actually like this now, right? This FDD account, your opening is here, 93. And the question say increase to 142, right? So I ignore the 30. So basically there's an increase. So you put here SOPL. Is that correct? Yeah, the number here. So that's why this is an expense. You see on the credit side, when you transfer to SOPL, it's on the debit side. So this is actually an expense. Okay, this is actually an expense. Yeah. So it's actually, the account actually look like this, right? This one is actually in your chapter, the trade receivable. I think it's chapter what, 7? Yeah, it's not, let's maybe include in your test. I can't remember. Okay. Now, the warehouse rent of 300,000, 30,000 per year is payable in advance on 1st December each year. Okay, 1st December each year. So meaning, so 1st December each year, right? Hang on. Somebody is outside, just outside my window. Okay. Now, so this one in advance 1st December. So you see, our closing is 31st May. So meaning we paid on 1st December. So 1st December until 31st May, how many months? How many months?
5.
December, January, February, March, April, May, right? So 1, 2, 3, 4, 5, 6. So it's actually 6 months in advance, right? Okay, 6. It's actually a 6 months in advance, yeah? All right, okay. So this one later on you need to make adjustment. No? Okay, and then you can see, oh, warehouse rent is here, right? It's here. Okay, 6 months in advance. So meaning half, so meaning you minus 15. No? Because 1 year is 30, half is 15. Okay, so see, you can put like this. So later on, you know what number. Later on, you put your working 45 minus 15.
It becomes payable.
Yeah, the 15, no, it's not payable. The 15 is become prepaid.
Do we?
Because you pay, because you paid 1st December. Okay, you paid from 1st December until the following. So it's actually a prepaid. This one is actually a prepaid. That's why you need to minus. I pay in advance, you see. You pay in advance. So this is a prepaid. Prepaid by 6 months. Okay?
Okay.
Right? Okay. A staff bonus of 23 relating 22,000 relating to the financial year ended 31st May 16 has not been included in the accounts. Yeah, so you see staff bonus you cannot find here, right? Okay, so you need to add. Okay, you need to add. So you put here SOPL. Okay? Yeah, has not been included in the account. So meaning you haven't paid. So this will be accrued. Yeah, so you have a current liability here, 23,000. Staff claim for motor expenses of 5,000 in respect of May 2001. This one should be 2016. I think it's a typo error. They have not yet been included in the account. So staff claim motor expenses. So do we have motor expenses? So if we have motor expenses, then we have to add back, 5,000. Right? Okay, have to add back 5,000. So included in the account. So this is also current liability. Interest outstanding on the mortgage at 31st May 2016 was 12,000. Right? Interest outstanding, so 12,000, meaning this one have already paid, not yet. So current liability. So if you see this here, there's an interest paid, right? You see here. So here I add plus 12. Okay, I plus 12. Just how the motor expenses got. Motor expenses here. So this one also have to add, right? Okay, the motor expenses. We also need to add. Okay, motor expenses have to add 5, right? Okay, 5,000 add 5. So I ignore the 3 0, yeah. Okay, so now interest receivable and overdue trade receivable as at 31st. Now interest receivable, we already earned, but we haven't received it. So this is our current asset. So this one will become our SOPL. This is actually an income. Interest receivable is actually an income. Okay, this is actually an income, right? Okay, the income tax liability expected. Okay, this one is very easy. This one you just take this number. The normally income tax liability, the question will tell you. So you just take this one, put into your SOPL. Okay, put into your SOPL. Okay, the directors have proposed a final dividend of 6% on the ordinary share. Okay, 6% on ordinary share. So you check how much is the value in terms of RM, how much? 1 million, right? Okay, so meaning this dividend is actually RM. Okay, RM. It's actually RM1. Okay, RM 1 million times 6%. So this will be your dividend. And this dividend already paid. You see the word here, it said propose, already paid, not yet. Okay. haven't paid, haven't paid. So this will be a current liability. But this question, they did not ask you to do SOFP, right? Okay, so it's a current liability. Yeah, okay, so we have gone through everything, right? Okay, then now we can start reading. So I already ready the template just now while waiting for you to come in. Okay, now, so all the number is basically from your question, right? Okay, so I'm going to show you. Okay, so first put sales, okay, because it's not on SOPL as required by the question. So sales, we can put here 176, right? Okay, then we have return outwards, return inwards, okay, I short form. Return inwards, so our return inwards is minus 249. Okay, so we get so that's how we get. Okay. Then we are going to less cost of cost of goods sold. Okay, yeah, we have to put cost of goods sold. Okay, cost of goods sold, of course, we start with opening. Opening inventory given in your trial balance. And then we have purchases. So purchases, which is 9726, right? And then we less return outwards. Okay. Now return outwards, just put yeah, okay. And then these three number, anything else? No more. No carriage inward, no what insurance or purchase, blah blah blah. Right. So we add them up. Okay. Then put the less closing inventory, which is in your notes. Okay, in notes. 1471. Okay, 1471. So where you actually get this cost of goods sold. Right? And this one is supposed to be a negative number because sales minus cost of goods sold, where we want to find is gross profit. Right? Okay, so this, yeah. Okay, so 419, right? So it is 2019. Okay, then we add income, right? Or we put other income. Only we put other income. Okay, so other income, underline if you want, if you don't want, it doesn't matter. Okay. Then we put what discount. Yeah, remember we have discount received, right? And we have interest received. Right? In the notes just now, we stated. So discount received 8 and this one is 4. So it gives us okay. So yeah. So after other income, so we'll get this. Right. Okay. Then we are going to less expenditure. That's expenditure. Right. Okay, so expenditure is actually very long now. So if you do not want to miss, so you can follow the sequence from the question. Now, so if I follow the sequence from my question, so the first one would be warehouse, right? Yeah, the best thing is follow from the sequence so that you won't miss. But this thing we have adjustment at 28 plus how much already? 28 plus oh not 28. 45. 45 we need to now this one at first we said there we already paid 45, right? Okay, but we need to minus 30 because it's 6 months in advance. 6 months in advance. Yeah. So meaning 45 minus 15 so become 30 lah. Right? This become 30. Yeah. Okay. And then the next one is heat and light. Heat and light. Is there any adjustment? I think no one. Heat and light, no. Okay. And the next one is the building insurance. This one, any adjustment? Building insurance? No. 60. And then telephone. During exam, please get ready your ruler. But I always have to use ruler, or else I don't know which number is that. Yeah. Okay. So telephone, there's no adjustment as well. So top. Then the next one is postage. Postage, no adjustment also, right? 8. Stationery. Oh, stationery. Stationery, any adjustment? No. And 3. Okay. Wages and salary. Wages and salary, no adjustment as well. Okay, next. Discount allowed, yeah. So discount allowed, which is 14. But that's which is 274. Increase in AFBD, right? Okay, so this one, 142 minus 93, correct? This one you have to understand what the question say. Opening is 93. They say increase to 142, so the difference, yeah. So you have a difference of 49. Yeah, so this is an expense. Okay, motor expenses. Motor expenses, this one we need to make adjustment, yeah. Because there's outstanding. Okay, so we have to add, so it's 47, right? Okay, 43 plus 5, not 42. So it's 48, right? Okay. And interest. Interest. Okay, interest also we have adjustment, right? 164 plus 12. Remember? Yeah, we did not actually pay, so it's 176. All right. Interest paid. Okay. Okay, correct. Okay. And then, all right, then depreciation. Yeah, okay. Now, depreciation, we need to calculate one by one. So, according to our notes, number 1, number 2, yeah. So, depreciation, the first one is motor vehicle, reducing balance method. Okay, reducing balance method, this one you need to work out your working. So, you go and find how much is your motor vehicle. Yeah, motor vehicle is 78 minus accumulated 34, right? Okay, times 25%. So how much is this? Okay, then we move on to the next one. So next one is office equipment. So office equipment, okay, 47, also the same, reducing balance method, minus 15, okay, times 25%. Right, okay, and then you have furniture. Okay, furniture. Furniture is actually a straight line. It's 5 years, so divided by 5. So straight line meaning we based on cost. So furniture cost is 25. So 25 divided by 5 years. Yeah, okay, divided by 5 years. Okay, so I think that's all. Right. So how much is your depreciation for motor vehicle? office equipment, furniture. So this will give you 11, 8, and 5, correct? Okay, so I think that's all according to the list. Anything else that is not in the list? Oh, staff bonus, remember? Yeah. Staff bonus. Yeah. Okay, so if we come back to here, see I have two SOPL, staff bonus, okay, interest receivable already included, okay. So I think that's all. Staff bonus 23. Okay, staff bonus is 23. Okay. Now, so okay, then we add up up to here. So this get to 2. Minus. So this is, and what you found is actually then so total expenses add to 2. So to be deducted by this gross profit after other income. So you get 1209. So 1209 is basically we call it net profit before tax. Okay, then you put less tax. Yeah. Okay, tax from the question given to 10 in your additional information. Yeah. Right. In the additional information here, this one, see SOPR 210. Okay, this one. All right. Okay, so then you have. So this is your profit for the year. Okay. So profit for the year, 999. Right? So done for your first part. Okay, yeah. So you see how I do it, how I actually put. So we take less than 30 minutes on. Now, why less than 30 minutes? Because actually I have answer in front of me, so I can actually double check. But actually my answer, this sequence is different from my answer. So you see, when you read your question, if you concentrate, somehow you can remember some of the things. Yeah. So of course, I hope you're able to practice like this. Okay. Yeah. When you read the question, okay, item by item, please label so that you won't miss anything. Yeah. All right. Okay. Now, then we are going to do part 2, working notes. Right. The question asks to do working notes. Okay. This is actually to calculate the appropriation account. So meaning, I would like to calculate at the end of the year, right, with the profit for the year that I have, how much is my retained profit that I can bring forward to the following year? I have opening retained profit, right? From the question, you have opening retained profit, this one. We have opening retained profit. Now we want to find closing, the CD. Yeah, now we want to find CD, okay? So this one, so we start from profit for the year. So meaning we continue from SOPL. Profit for a year. So profit for a year, what we found is actually 999, right? Okay, 999. Then we actually adjust for appropriation. Appropriation is actually okay. There are only a few items that we need to look at. Right? Okay, the spelling is wrong. Yeah, how do I spell? ROPRIN. So less appropriation. All right. So we have interim dividend. Interim dividend is actually in your question. Yeah, interim dividend means we already paid. And this one, interim dividend paid on 1st November. Okay, so it's 10,000. Okay, and then we do have our proposed final dividend, right, in your notes. Okay, so proposed final dividend is this one I'm going to show working on is RM. Okay, 1 million, right? 1 million times 6%, right? So this will be 60. This will be 60 now. So meaning, once you have your profit, you need to minus all the dividend that you distribute. Now, dividend is not an expense. Please remember, dividend is never an expense. It is a distribution. Distribution, you give it to your shareholders. Yeah, it's a distribution, right? So we have this two up, and this one is a negative number. Okay, so then so there's no other adjustment. So sometimes they will test you like transfer, transfer to general reserve, right? But this one don't have. Okay, then don't have, only 2 dividend. So we adjust the 2 dividend. So this is actually what we call okay. And then then we have opening then we add our opening return profit. BD. So how much is our opening? Opening according to contract 550. How many? 550. Okay, then it will give you your net profit, but this one is CD. Okay, so this CD you're going to put into your SOFP. And if you're asked to do. Okay, so like this. Okay, so 1479. So your answer, your closing retained profit is 1479. So basically, this number, okay, to XOFP. Yeah, in your XOFP, you have one item called retained profit, right? So this number goes to there. Okay, this number goes to there. So to SOFP. Okay. So what is new? Okay, what is new is actually this part. The working notes and this part here, right? This part is actually new to you, yeah? So this one. Okay, yeah, this is new. So you put net profit before tax, less tax, profit for the year. Okay, and then you need to do working notes on the appropriation, right? Okay, so this whole thing is new. So you put your profit for a year, and then what do you need to minus? Normally in appropriation account is to minus. So one of the items that you will have is always the dividend. And then the dividend normally you have two. One is interim. Interim means you pay in the middle of the year. Yeah, like let's say you start 1st Jan until 31st December. So normally it's somewhere in June, end of June or July. Yeah, that is called interim. And interim is already paid. Yeah. Okay. Now, and then propose at the end of the year, normally we'll propose. But whatever that you propose haven't paid. Okay, haven't paid. But but in terms of profit, we need to minus. Even though haven't paid, but we have to take into consideration. We need to minus, right? We need to minus. Then we want to check how much is the retained profit that we can brought forward to the following year. Yeah, we can brought forward to the following year. All right. So any question on this? Any question? Just now I already shared. Yeah, I already shared with you part B question 1 and 2 answer. Yeah, so you can actually try. Right now, when you do question like this, you are basically doing the revision for your financial, for your SOP, SOFP, which will be tested in exam. Okay, that is a compulsory question. Right? Okay, now if no question, then this is your answer up to here. Right? Okay, so this format you have to know this format. So accounting, the financial accounting is actually financial accounting. Financial accounting is you must use the right format. If your format is wrong, you cannot get the something is not right. So at the end you can't get your number. Yeah, okay. So if you miss out 1 or 2 items, it doesn't matter as long as you can get majority of the marks. So in final exam, make sure you score at least 40%. 40 marks out of 100. If you score less than 40 marks out of 100, no matter how high is your coursework, it's considered fail. Yeah, it's considered fail, right? So final exam, please also study hard. Make sure you score at least 40 marks out of 100. Then that mark plus together with your coursework. So because it's 50% coursework, 50% exam, yeah? All right? Okay, no question, then we go to question number 2. Okay, question number 2, money comes never hard. So what they want you to do is this one, statement of changes in equity. Okay, this one is statement of changes in equity and appropriation account is actually it's actually the same thing, but just that the presentation was slightly different. All right, okay, now statement of changes in equity is my favorite. This one is very easy to do actually. Of course, you must know a few things. Okay, so the question say this is a trial balance. Okay, the trial balance extract. So the question give you ordinary share capital 2 ringgit each. Okay, 2 ringgit each. So this RM. retained earning asset. First Jan, so meaning this is your opening retained profit. All right, again, this is your opening retained profit. Right, so put down here. So this is actually your opening retained profit. Yeah, so this is actually RM. Okay, these two numbers is actually RM. Now, profit for a year, okay, after tax. Huh? Now, after tax profit for a year. Before tax called profit before tax, right? So, okay, this number, the directors decided to transfer, okay, 150,000 from retained earning to general reserve. Okay, what is your double entry? What do you debit and what do you credit? Anyone? Transfer 150,000 from retained earning to general reserve. So, what is your answer? Anyone? What's your answer? What to debit and what to credit? Transfer
Debit
from retained earning to general reserve. Debit?
debit the reserve.
Retained earning to general reserve. Both retained earning and general reserve are equity. So what to debit and what to credit?
Debit retained earning.
Yeah. Debit retained earning, credit. Make sense?
Reserve.
Because this one is plus, right? This one is minus, correct? Because we transfer from retained earning to general reserve. So we are going to minus from retained earning and then amount we actually put to general reserve. So that's why this minus is plus. Okay, these two items are equity. Okay, these two items are equity. So equity, if you want to increase, okay, is on the credit, right? Remember? Yes, yeah. Okay, the directors of the company propose a final dividend of 9% on 29 December. The dividend will be paid to your shareholders in Jan. So meaning this one is accrued, isn't it? We propose, but we only paid in the following month. So this is actually a dividend accrued, yeah. Dividend payable, okay, or we call it dividend payable. Okay, now this one, how do you do statement of changes in equity? Okay, I also have my template ready. Okay, this is my template. All right, now from the question, we're going to we always start from opening balance. Okay, balance at 1st Jan, okay, 2017. So 1st January, yeah, right, 1st January. Okay, 1st Jan and okay, before this. How many items we can put it here? How many items we can put it here? So we have ordinary share capital, right? And we also have retained earning. Yeah? So this, why I say got these two, because it's actually given from the question. Yeah? The question say we are ordinary share capital, and the question say we are retained earning. Yeah. So both these are actually our opening. And then later on, we need to have a general reserve. Remember, there's a transfer from retained earning to general reserve. And this one we put a total. Okay, we put a total like this. Yeah. All right. Okay, so as at 1st Jan, how much is the balance? So this one you copy my question. So the balance for ordinary share capital is 191,200, correct? Yeah, and retained earning given is 121,000. Right? This one no opening. So how much is my total? So yeah, all right. Okay, then now here you got to record what is happening during the year. Okay, like we have the question say what we have dividend, right? Okay, we have dividend. So we are going to calculate. This dividend is 9% on the issue share. So our share issue is right 912. Okay, right times 9. So this is what we're looking now. When you distribute dividend, you will reduce your retained earning, right? Okay, so your number should be here. Okay, so you take like 1.9. This 1.9 plus ordinary share. Okay, times 9%. So how much is that? 172098, right? Okay, yeah. Okay. After that, then we will have a profit for a year. Profit for a year, the question also gives us, right? Now, profit for a year will increase our retained earning, is that correct? Okay, so this one you copy the number from the additional information. And remember we have transfer, okay? So our transfer is we transfer from retaining. Remember that's what we said we debit. So we minus 150 and we are going to add. So from retaining we transfer to general reserve. So but no matter how you transfer, this 150 is still under the reserve. Yeah, still under the equity. Right? Still under the equity. Okay. So
Just write transfer.
yes, just write transfer, okay.
Oh.
Or you can put, oh yeah, okay, if you want to be more detailed, you can put transfer to general reserve. Okay, right, so no more, okay. This. Okay. Right, so here, okay. Here, just, right? Okay, so this is the answer that we want. Okay, so this one. So this is the closing. So you see, you start from opening. Okay, you start from opening, then the end is actually your closing at the end of the year. Right? At the end of the year. Okay, so this is question 2. Yeah, this is actually question 2. Okay. Oh, this type of question is my favorite. You know why? Second question is easy. Come up with the answer also very easy. Yeah, this is actually my favorite type of question. But for you, this question might not come out. So just see whether this question will be tested or not. But normally for your level, we get you to do something simple. Yeah, not so difficult because your level is BPFA 1043, so it's level 1. So we try to, but so that's why this part also we teach you very simple one. Actually, for accounting students, you have a lot more. It's a long list. So for you, you only this little thing, okay? This little thing. All right. Okay. So any question? Question 2?
Oh, just how do you do the summation so far? How do you do the summation so fast?
Use formula like this one, right? See here, sum.
How
Yeah,
do you,
use this one.
oh, do you write it down or
No, just click. Like for example, okay, let's
is
say,
it, oh, it's up there? You click.
yeah, you see here sum. You can
Uh-huh.
see my screen, right? Okay.
Oh, there's a key. Oh, there's
So
a
yeah,
key.
so I put like this. Yeah, sum.
Oh, yeah.
So I enter. So you see the amount is here. All right. And then, so if you want to go sideways, also can. You want to go sideways, also can.
Oh, I'm still struggling with the additional
Uh,
information.
Hotkey alternate plus equal. Okay. Hotkey. Now I don't use hotkey because I don't remember. It's like now you tell me I remember, then after that I don't remember. So for me, it's like always use this one. Also okay. Alternate plus equal. Let me try. Alternate plus.
You have to select all the numbers.
Oh, okay. Select all the number, and then
And another empty row below.
put here.
I mean, from row 26 to row 31.
Like this.
Yeah. Oh, yeah.
Alternate plus equal.
Yeah.
Oh, this is really something that I never learned. Yeah. Thank you, Noel, for sharing. I really don't know this. Yeah. Actually, Excel is very, it's to me it's actually very complicated if you don't know how to use. But I go for the simple one. So for me, I always click this one. Can already. Interesting. So it's like this, and then alternate plus. Oh, so alternate must price lah. Okay. Yeah. But for me, it's like this, so no need to worry. Just make sure you want your answer here. Okay, just click. Then I just enter. Right, for me, that's how I remember. But if you ask me to use the what key, or this one, unless you use every day or else I cannot remember. Okay, thank you for sharing, Noel. Now, okay, question 3. Now, explain the issue of par value shares. Then explain the issue of no par value shares. Issue of par value share. Actually, every share, right, there's a par value. Sometimes the par value can be 50 cents, some can be 1 ringgit, but normally when we test it, we normally put 50 cents. Okay, so I just show you this. Right, so normally we put, oops. Yeah. See, can see my answer, right? Okay. So it said par value shares have a fixed face value. Yeah, is actually there's a fixed face value. Yeah, right. And then for example, RM1 per share. Yeah, so it can be 50 cents, it can be 1 ringgit, it can be 2 ringgit. Now, any issue price above 1 ringgit becomes share premium. Meaning, if your par value is 1 ringgit, and now when I issue to the public, I issue at 120, for example. So the 20 cents is above the par. So this 20 cents is what we call share premium. It's an extra that shareholders are willing to pay because this company is worth it. Yes. Par value is 1 ringgit. But if I am the company, I want to raise more money. So I issue to the public, I issue at 1 ringgit and 20 cents. However, if the public have confidence with my company, they think that my company will be doing well in the future, they are willing to pay like 1 ringgit and 20 cents, 150, they are willing to pay, these investors. Yeah, so because these investors, before they invest, they did study your company. Yeah, okay. So I will get 20 cents extra on every single cent. Yeah. And this 20 cents extra is not part of my ordinary share capital, but it's actually called a share capital. Okay, now this is actually an old law. But according to the latest Companies Act, yeah, the latest Companies Act is 2016. In fact, there's no more share premium. If I issue at 1 ringgit and 20 cents, yeah, if I issue at 1 ringgit and 20 cents, right? Let's say, okay, right? So let's say I issue 1 million number of shares. So I will receive 1.2 million ringgit. And all this I actually put into my ordinary share capital. Okay, ordinary share capital. This is according to the new law. Now, what is the old law? Okay, if according to the old law, it's like this. I received 1.2 million, right? Then I got to divide. Ordinary share capital is RM1 times 1 million number of shares. And then share premium will be RM0.2, 20 cents times 1 million number of shares. So this is the one in red is all law. Now we are using this one. Okay, we are using this one. Yeah. All right, but anyway, this is not in your syllabus, just to let you know. Okay, no par value. So sometimes there's no par value. No par value is when the company shares has no par value. There is effectively no minimum from which to price the share, but it is determined by demand and supply of that share. So this one actually there's no par value. So depends on the demand and supply. If the demand is good, it might go up to a high value. If the demand is not good, meaning people do not have any confidence, so meaning you can't sell at a high price. Right? Okay. So issue of shares. The purpose to issue of shares is basically to raise capital. To raise capital to run your business. Yeah. To raise capital to run your business. All right. Okay. Number 4 actually asks what is dividend. Right. Number 4 asks explain the term dividend. Is that correct? Explain the term dividend. So what is dividend? Okay, dividend is means of distributing profit to shareholders. Yeah, distributing profit. Okay, oops. It's distributing profit to the shareholders. Yeah, so dividend is not an expense. Okay, dividend it is not an expense to the company who distribute the dividend. If the company receives dividend, that is actually an we cannot say it's an income. We don't say it's an income. Yeah. So it's a distributing profit. So it is not an expense to share. It is paid out of the company's distributable reserve. Distributable reserve like retained earning, like general reserve. Yeah. For example, Okay, for example, right? Okay, for example, it's actually retained earning, general reserve. It's called distributable reserve, right? Or another word, we group these two as revenue reserve. Okay, so this is a higher level. Actually, this one is for level 2. Level 1 no need to learn. Okay, now, question 5 asks for what? Show the journal entry for a final dividend. Yeah, if you have a final dividend, what is your double entry? Now, normally, okay, take for example this question 2. Okay, you see, propose, right? Is it propose? Okay, propose, is that? Yeah, it's actually actually it say it's actually proposed. Now, when you propose, meaning have you paid? Haven't paid now, right? Okay, normally final dividend haven't paid now. So what is your double entry? What account to debit and what account to credit? What is your double entry? Debit, credit? Yeah. What do you debit and what do you credit? Anyone?
Debit retained earning.
Debit, retain earning.
Retained
Yes.
profit.
Because all the dividend that we distribute is going to reduce our retained earning. Yeah. And we credit to
Final dividend.
dividend, dividend payable, right? Current liability, isn't it? Okay. Yes, it's a current liability. Yeah, it's a current liability. So, okay, see my answer. Debit retain profit. Okay, credit proposed dividend, or we call it dividend payable. So it's a current liability. All right, it is a current liability. Okay, it is a current liability. Yeah, it's a current liability. So we call it a dividend payable. So a final dividend is usually still outstanding at year end. Yeah. If it outstanding at year end, normally it will pay only the following month. Let's say your last day is 31st December. So normally dividend will be paid in the month of January the following year. Yeah, in the month of February the following year, right?
Oh,
Okay. What is general reserve? And what are the benefits of setting aside a general reserve? Yeah. Just like just now, question 2. Why? Why transfer? Isn't it? Why transfer to why transfer to general reserve? Why? So your answer is okay. Now the general reserve are also referred to as free reserve. It does not have a specific stated purpose. Okay, no specific purpose. So maybe used if company is in need. It creation adds liquidity to the company. Yeah. So sometimes we use general reserve to distribute dividend or on other things. So basically means right, we actually put aside a certain money for future use when we need it. Okay, when we need it. Yeah. Okay, benefits of setting aside a general reserve are there is more liquidity in the company. So it's actually give you a better liquidity, right? Okay, give you a better liquidity, yeah, in the company, more available working capital for the company or to save up for paying off obligation. Well, it can also be like this. Let's say this year my company is doing very well, so I have a very high profit. But the thing is, we cannot say, oh, this is high profit. Okay lah, use up all the money to give dividend. Cannot. Who knows? Tomorrow, if business not doing well, where to get the money? So that's why we need to do some savings. So it's a scheme. Personally, you need to do some savings. Like for a company, this is how they actually do the savings. Yeah, so they save it aside. Okay, they put it aside. So when they need it, they use it. Right? Okay, so that's why you say, give the company a liquidity. Okay, yeah, more liquidity. Let them have some, money that they can use in the future. Yeah, some money that they can use in the future. All right. Okay, so only 12. Okay, then do you want to see your test answer? Because the following question is actually a bit long now, so I don't think we can finish. And I already give you the answer guide, so you can actually try. Now your test. Okay, let me stop presenting first because I need to download. I actually back home over the weekend, so I don't have anything in the office yet. This morning I forgot to download.
Very curious.
Yeah, very curious. Okay. I need to check from the email. Mr. Narum sent me from the. Oh, I can show you the marks actually. Now I remember. Okay, wait. I'll show you the marks. Okay. But I need to download the question index. I actually don't have it here. All right. And then I have to show you your marks. So, oh, it's actually in the WhatsApp. Yeah, I put okay, I saw this thing in the email, but the table, can I actually, this table I cannot copy out. But in the WhatsApp, maybe, yeah, I did share the lesson I learned of marks. Oh no, not in the WhatsApp. Okay. Okay, so I show you your marks. So you will sleep. Okay, so this is your marks. Can you see? Oops! Wow. Okay, can you see? Test 1, test 2, total. Yeah. Okay.
Okay.
All right. So this is your marks, huh? Okay. Then I will let you see your answer. Okay, download. Okay. Okay, question 1A is very easy, right? I think all of you okay now. This one you need to know where to put your, yeah. Like I told you, okay, now accounting, why I say it's not difficult because you have to understand every single term. What is it? Like what is purchases? Okay, if you know what is purchases, then for sure you know to put debit or credit. Okay, what is fittings? Yeah, so those highlighted in black, that is actually the answer. So if you put at the right side, then this is your answer, correct? So I think all of you got full mark, like 8 marks. Okay, this one very easy, 1 mark each, so 8 marks. Okay, and then okay, and then they say okay, the above error. You see, they actually ask you. So basically, it's posting to incorrect site. Yeah, posting to incorrect site. Okay, yeah, it's actually posting to incorrect site now. So if there were errors of omission, then new item would need to be added or existing. So basically, you do not. I think this one you only get 1 mark. The other mark you can't get because I think none of you actually answer this. Okay, none of you. So either we are errors of omission or posting to incorrect site, right? So errors of omission is basically totally omitted where we need to actually add. Yeah, we need to actually add. Okay, add to the existing. Yeah, right. Okay, part C. A missing sales invoice would affect. Yeah, if one of your sales invoice missing, so how will it affect? One of your sales invoice missing, meaning your sales will be understated, right? And if it's a sales on credit, then your trade receivable also will be understated. So meaning it will affect your sales and it will affect your sales account and your trade receivable account, isn't it correct? So basically, this one actually you can figure out. Your double entry is actually you should actually debit your trade receivable and your credit sales, correct? Yes. Yeah. So it will be affecting your sales and your trade receivable. So the double entry is supposed, if let's say this one is omitted now. So when you want to do adjustment, it's actually debit trade receivable and credit sales. So remember, sales is an income. So it always on the credit side. Okay? always on the credit side. Yeah, okay, remember, yeah. Okay, and number D, depreciation. Depreciation. If you have depreciation, what is your adjustment? Now, this one also I can put it this way, now. Debit, credit, I ask you. So when you have depreciation, what is your double entry? So we debit depreciation account and we credit accumulated depreciation account, right? So remember this one, if I show you in the T account, yeah, if I show you in the T account, right? So this is your depreciation, this is your accumulated depreciation. So you actually put your number here, right? And then you transfer to here, correct? Yes, double entry. Yeah. And then here, your CD. Okay, let's say this is your first here, right? And you have a BD here, correct? And depreciation account, you pause to SOPL. So this account is actually closed. Isn't it? Correct? Yeah, if you still can recall the chapter depreciation. Now you see, depreciation chapter is important so that you know how to do question like your SOPL, SOFP. If you don't know depreciation, you can't find your depreciation amount. Then at the end, your SOFP will not be balanced. All right, okay. And question, okay. The test question, yeah. So question 1, the small one already done. Okay. Question 2, prepare a statement of profit or loss. This is very easy, isn't it? Easy, right? 7 marks. Easy. See, just look at the items. Looks familiar, huh? Right? Okay. Yeah. So for this one, oh, I got to erase this. See the answer. If I said question, I don't like my answer like half. I will put it the following page. Okay. Yeah, it's easier to present the answer. Yeah. So okay, this one is, please memorize the format. Always start from sales. This one is optional. Return invoice is optional. Depends. Depends. Not every time you have this. Okay, then you have net sales, right? So you see, so meaning this one is half mark. Okay, half mark. Okay, and then this one opening stock is half mark. Purchases another half mark. Return outwards another half mark. Yeah, and then carriage inward, closing stock half. Okay, so you get the gross profit, and then your other income. Okay, other income like this. Okay, and then this one salary, right? This one, right? So altogether 7 marks. So meaning there are 14 tick. There are 14 ticks, so it give you 7 marks, right? Okay, it give you 7 marks. Cannot. So do you get it correct? I can't remember. Is it you all got it all correct? I don't remember. I think so. This one very easy, right? No adjustment. This is very simple. Can everybody got it right? Everybody get this answer? 23,600? Should get it right. Everybody get it right. I can't remember already. Yeah, I marked, I think, on Saturday night, I think. Okay, now question 2. Question 2, this one, some of you might, but I think you only get one wrong now. Question 2. This concept, okay, this concept promotes the recording of prices at the time of purchase. So it's historical, right? Correct? Yeah, just show you answer. Okay, historical, right? Promotes the recording of prices at the time of purchase. So meaning if you purchase at 1,000, then you record 1,000. So it's historical. Okay, it's actually historical. Now the concept makes it possible to record trade receivable and trade payable in the accounts. There is trade receivable and trade payable. Yeah, it's accrual and matching. It's just like income that you have earned but you haven't received the money. So it's called what is actually a current asset, right? It's income receivable. Yeah, it's accrual. So accrual and matching is basically for us to calculate an accurate profit. Yeah. Okay, this concept makes it possible for accountant to recognize bad debts. Yeah, bad and allowance for debts. Prudence. This one is prudent, meaning you see, allowance for doubtful debt is we are not sure. We are not sure, but we estimate that it might be 2% or 3% out of the total trade receivable, which these people cannot pay. So this is actually an estimation. Yeah, it's an estimation. Now, you see, even though it's an estimation, we need to treat it as an expense. All right, so it's prudence, meaning we should not overstep asset, should not overstep income, and at the same time, we should not understep liability and understep our expenses. Yeah, all right. Okay, the concept shows that it is possible to prioritize certain items over others, and this determines the accounting treatment. So it's materiality. Possible to prioritize certain item over others. So materiality. So meaning you've got to see the amount. So materiality meaning if the amount is big, if this transaction is huge, it affect other parties, affect the outsider. So priority must consider first because it will affect other parties. Yeah. Okay, when there are two possible versions of reality, which concept give guidance to management as to which option? I think this one a lot of people got it wrong. Substance over form. Substance over form. Okay, the example that in your notes you can see is they say what? When you buy a car using installment. So the thing is, you buy this car, okay, you pay a down payment, then you are going to pay by installment for the next 5 years, right? Okay, now in terms of paper, this car, does it belong to you? Does it belong to you?
No.
No, you're still owing to the bank, right? But you're using the car every day. Go to work, go to market, go to watch movie, fetch your friend. But you're using the car every day. But anyway, this car, does it belong to you? No. You try and see if you don't pay the installment, the bank will actually, people say what, tarik your kereta, right? Okay, so it's substance over form. So what you see, everybody see that, wow, Kelvin has a new car, oh, so shocked. But they don't know that actually Kelvin still owe the bank. Yeah, so substance over form. Okay, now this one, which concept encourages management to look for criteria before a sales is counted as a completed sale? Yeah, how do you recognize that this sales is actually realized? So realization. So how do we say that the sales is actually realized? First, you deliver the goods, the customer receive the goods, and you actually send the invoice over and the customer receive the invoice. This is considered sales. So meaning the customer will pay you maybe in 30 days. So depends on the terms, depends on the credit terms. Yeah. Okay, the last one. Which characteristic emphasize that the accounts will be free from major errors and is dependable? Reliability. Okay, yeah. Then you see the word dependable. So can you depend on it? Yeah, so reliability. All right. So this one is actually, you see, wow, very expensive, 2 marks each. But luckily, I think you all only got it wrong by 1. I think out of 7, you all can get 12 marks. So maybe only 1 wrong. This one, substance over form, right? Correct, not? If I still remember. Okay, and the next one, this one. This one also some of you, yeah, I think some of you not very clear, right? Okay, now. Electricity paid. Electricity paid. This one is expensive than electricity. Okay, this one no problem now. Everybody got it correct. Okay, annual insurance premium paid for business insurance. Insurance, this is also an expense. Okay, hiring a lorry to bring machine to factory before installation. Now, this one actually is part of your cost of machine. This is actually your part of your cost of machine. Isn't it? Because you see, right, when you want to determine the cost of the machine, you remember the formula says what? Make sure the machine put at the right condition, isn't it? Yeah. So if you want to put the machine at the right condition, then you need to the lorry, because meaning, right, you need to transport the machine to the right location. You install, then only you can use. So the transportation cost need to pay enough. Yes. So that's part of the cost of the machine. So in this case, then it will be a capital expense. Yeah. Okay, it will be a capital expense, right? Purchase of a new printer. New printer. This one obviously is capital because you buy asset. Okay, this is actually an asset. Non-current asset, isn't it? Yeah, printer. Yeah, depends on how much your printer lah. Your printer is those 3,000, 4,000. That one is a non-current asset. If a very cheap one, 200, 300, that one is what? Okay, that one is expenses lah. Okay, cost of replacing a small spare part in the machine. Small spare part, is it small? Expand lah. Okay, small, meaning insignificant. So you treat as an expense. You cannot say it's a capital. Installation of a new heating system in place of the old heating system. See, you replace. The old one, let's say the old one not functioning, so you get a new one. But you get a new one, do you need to install? Yes. So this is also part of the cost of the heating system. So it's capital. Okay, it's capital. Import taxes paid during the purchase. This is your cost of purchase. So cost of purchase is capital. Okay, can you differentiate now? Is it better? Can you understand better? Any question on this? Question 3?
So far not.
The printer cannot consider like can be replaced eventually, meh? Or
Purchase
yeah.
of a new printer for staff to perform work. Meaning this printer you buy is actually for your staff to use it in the work. Of course, you
but
will say,
eventually you will still replace it, right?
yeah, not necessarily replace. We say new printer. Maybe before this no printer. Now they want the staff to work better, so the company buy a printer. But another possibility you can say is, can you say this printer that I buy is for resale, like inventory? Cannot be lah, because
Yeah.
if you read this question, it is like the printer that you buy is actually for the use in the office. So it must be an asset. You get it? It must be an asset. So if it's an asset, then it must be a capital. Okay? It must be a capital. Okay?
Just assume it is supposed to last more than a year.
Yes.
And then,
Yeah. But the thing is, right, if you apply materiality, okay? If you apply materiality, let's say this printer is only 300 ringgit, right? Okay, yeah, actually 7 or 8 years ago, right, I bought a HP laser jet printer, small one, very mini one. That one is, I think, cost, less than 300, 200 plus only. Okay, let's say this printer is 300, but the company policy say, anything below 500, anything below 500 is not an asset. So this printer, if you do have this policy, then this printer, it is a revenue. You get what I mean?
Okay.
Understand or not? But you see, since the question did not put down how much is the max, right? So, and obviously it's actually used in the office. Yeah, and we know that printer is not 1 year. You see my printer, the one that I bought, because back then I was actually, I started to do my master, so I need to print out some articles to read. So I actually bought, I use it until now. Yeah, it's a laser printer. It's still good. Very small one. The smaller HP got a small one. But of course, now you can't find this model anymore.
Laser printer got ink, no need ink.
No laser printer, you use cartridge. So you see, mine is like 8 years, I think. Yeah, God, I think 8 years already. Still okay. So I just changed the cartridge. So I because there are people who say laser printer expensive. So you all buy those what they call it use ink. Actually, use ink is not good because if you don't use it very often, the ink will actually dry. Once the ink dry, then you throw away the ink. So it's actually well, I don't know. I don't. Yeah, when I want to buy, I thought of that. So I better go for laser printer. So a laser printer is good because it will not the cartridge, right? It can last longer. So even though I don't use it for a while, but it's still okay. I still can print. But I'm glad that I bought that printer because now because like since last year, like both my children study at home, so they actually on and off they will need to print some homework. They write, and then they go to after they write, then they snap, and then they hand into the teacher. Yeah, because they don't know how to. Some of it they can actually use PDF, right? Yeah. So I'm glad I actually bought it. So my children actually use it. Yeah, and I also use it at home. Sometimes I do my work. Yeah, I also print it out. Okay, so this one, revenue and expenditure, capital. So revenue expenses is basically we treat as an expense. Capital is basically we buy something that the value is high and we expect to use it for more than one. Okay, yeah. Right. So the next one, this one. Okay, this one I think this is the question that you can't really master. I think it's this question. Okay, so this one, Mr. Cat bought a machine, 140,000 on 1st Jan 2020. He estimated that the wear and tear should follow a reducing balance method. See, reducing balance method. Okay, we use reducing balance method, 20% per year. Yeah, calculate the depreciation charge for the years 2020 and 2021. Okay, so the best method is, remember the one that in your lecture or during tutorial, how we did it? Calculate net book value. Okay, you see, right? In fact, this one, you only do one working, then you can find all the answers. Yeah, I mean A and B, you can find all the answers. So you see my answer, yeah. Okay, yeah. So 2020, actually this one did not answer the question, right? Okay, never mind. Now we start with cost 140, right? Okay, depreciation 20%. This is your year one, right? Okay, so this is actually year one. Now this is year one. Year one means it's year 2020. Year 2020, this is my depreciation. Then I have a net book value. Then this is my year 2021 depreciation. This is my net book value. And this is my year 2022. All right. So use this method to calculate your answer. Then for sure, yeah, you are able to get, so you calculate until year 2022, right? So from here, you get all these marks now. Yeah, okay. So this is year 2020 depreciation, year 2021 depreciation, year 2022 depreciation. All right, so here for 3 marks. Okay. Now, how about the T account? This one, I think you all don't know how to do. Okay, now you see, year 2020 depreciation is 28, right? So you put accumulated depreciation there, 28, and at the end of the year, close to SOPL. Year 2021, see, 2020, 21, right? Okay, so see this number, right? Yeah, this one, okay, this number, right? Okay, so same thing, depreciation is an expense. So at the end, you post to SOPL. Can I? All right, okay, now, then next, double entry. You see your double entry. Yeah. It's slightly smaller. Okay, now see double entry, you see double entry, here accumulated debit, right? Here is credit, right or not? Yes. Yeah. See. Now this one we start from our first year. See, first year is year 2020. Okay, double entry from depreciation account, correct? And then balance CD. Okay, and then you brought forward to balance BD. So this is year 2021, isn't it? Correct? Yes. And then year 2021 depreciation. Remember just now you're working, and this one you can get from the depreciation account as well. So remember, accumulated means what? Your number is getting higher and higher, right? Okay, so these two plus together, your CD. So this number, okay, in your SOFP, So this number 28,000 appear in your SOFP in the year of 2020. This number appear in your SOFP in the year of 2021. Okay? Can So I think this part, some of you got a bit confused. Yeah. Okay, and that's all. That's all, right? Oh, depreciation. Yeah. Any question? Any question on this one? Accumulated and depreciation?
Does C and D?
Sorry?
Does C and D? Thought only C only.
C is this one, C is the depreciation account.
Oh, they are gonna ask for the depreciation.
Yes, depreciation account for the year ended 2 years only. Actually, do 2 years only. Year 1 and year 2.
I only I only answer for
Ah.
the I only answer for the accumulated. I didn't.
Yeah.
I think I missed the.
Yeah.
I
See,
think I did miss that one. Yeah.
this one is depreciation account. Okay, the other one is accumulated depreciation account.
Yeah. I only did for the D.
Yeah. If I want to test you further, right? I will ask you, okay, in SOPL, in SOPL, in SOPL, SOPL extract. In SOPL, what do you put? In SOPL, you only put depreciation on. Okay, how about SOFP? SOFP for year 2020, for example. So if you want to do SOFP year 2020, you put like this, right? This is your cost, right? Then you minus 28, then you got your net book value. Okay, this is year 2020. Year 2021, okay, cost is still the same, but this one become 5, what is the number? 5 something already, right? 50. Okay, so here become 50400, isn't it? See, if I want to really test your understanding, I can test you like this, in SOFP. How do you record this machine? Can I test like this? So you put machine at cost, depreciation is first year, right? Okay, year number two, machine, okay, and accumulated depreciation, then this number. Okay, can I? So I can actually further test you SOFP now. But this question did not, so test you up to here. So any question? Now, this is your week 7, all right? So maybe some of your subject lecture, what already done, right? Assignment, everything done, isn't it? Right? Test also done. So please start to do revision. So go and read through your past year question. Yeah, go through your past year question. Yeah, go through your past year question. If you don't read your past year question, you don't know what type of question will come out. And you try and sit down 2 hours, can you finish 4 questions? So I would say you have to be very, very fast. It's like you need to be very, very sure what you need to do. Like those questions in tutorial 11, the SOP, SOP. When you see this, immediately you will say, okay, this one I have to add back. And the amount I add back is the current liability, like that. Yeah, you have to be very fast. So during exam, this semester is still online now. If you are able to print out your question, please print it out. Yeah, if you're able to print out. But I know not everybody has printer, right? Yeah. Like for my children exam, right, they normally print it out and put it in front of you, then you can actually see. Yeah, if you're able to print, please print. If you can't, then you have to on. But if you use soft copy, that is very, unless you open 2 window, unless you open 2 window like this, yeah, you open 2 window like this, but you see, you open 2 window like this, it's very small, isn't it? So you see, the best thing is if you're able to print, please print out your question in front of you. Then your worksheet, you use Excel, right? Your worksheet, see, you can see the whole page. Yeah. Like for me, okay, if you have a big monitor, like at home, I use 24 inches monitor. So I can put 2 A4 side by side. I can see very clearly. So, okay, so you're pandai, right? So if you are able to print, please print. If you're unable to print, okay, then you have to, because this one you have to be really very, very fast. Test is different. Test will test you small part. But exam is your question will be slightly longer. Okay? So do you have any question? So you see your marks, Yeah, all right. Okay, so I'm glad that nobody need to go for Med Good. So, all right. Okay, so any other question? If no question, then I'll let you go. Yeah, so I'll see you again on Thursday. So Thursday will be the last tutorial, Right? That one is your last topic. Yeah, that one is ratio. So ratio, you need to memorize some ratio. Ratio is actually very easy lah. You know, you memorize the right formula. Make sure you put the right number, then you are able to get the answer. Yeah. Okay. So if no other question, yeah, I'm going to see you on Thursday. Yeah.
Okay, Miss.
Okay.
Okay, miss.
Yep. All right. Thank you very
Okay.
much. Take care.
Okay, thank you.